Hi, guys. We'll be starting in just a moment. Hey, Martin, Jasik, Simon. I have put a strategy workbook, if you have not seen it already, in the chat box. Feel free to download it. Hey, Eduardo, good to see you. Hope you're doing well. It was a wild and woolly day. Hi, Enda. Marlene, George. Hey, George. So it is 4:30 our time. I'll wait about another 30 seconds. So welcome to the third of our three-day live trade webinar execution series. My name is Mark Shawson, the Pattern Trader. If you have missed the last couple of sessions, just a quick recap. Basically, I make all of my trading decisions exclusively based on price and price action, because I believe the market is a discounting mechanism. The market is ahead of the news. The market is ahead of events. And boy, do we have a lot of events coming up. We had the Microsoft earnings last night. I think we've got GDP tomorrow. We've got PCE on Friday. We've got the Fed next week, and that's going to be the big one. I think February 1st, Federal Reserve probably go 25 basis points, but it's what they're going to do afterwards. And then we got Apple on February 2nd. So how do we figure all of this out? Do we dig around in the Federal Reserve notes and see where things are going? No, we have to look at price. Price is a forward-looking mechanism. So on Monday, I kind of looked exclusively at the stock markets, the indexes, a lot of stocks we were looking at. Yesterday, we looked at the precious metals, gold and silver, and looked how they were breaking out, looking like they were going to go the upside. Today, I'll spend a good deal of time on FX. Got to cover a little bit of the stock market. There were some big moves today. Before I do that, I kind of always like to share what I'm doing. It's not always right, but I like to be transparent. I've been long these Apple puts. I bought these things yesterday, I believe, and I should have gotten out today. Apple dropped like $3-4. I probably could have doubled my money. And it was probably a big mistake staying in this thing. I do see some technical levels here that this should resist that, but then I also see the market possibly going higher. So there are, a lot of conflicts in the market. It's kind of like watching my mother-in-law go over a cliff in my brand new Ferrari, very conflicted. I really shouldn't say that. She was a lovely lady, but that's just where we're at right now. Just so many cross currents in the market. And, what I try and do is go in with a plan before the market opens. If you're trying to react to what's happening, you'll inevitably just fall into the swim and get sucked in and go the wrong way. So I try and come in with a plan. It's not always right, but at least I'm in control. So I came in along these Apple puts expecting, Apple to go down. It went down big this morning. I should have cashed in. I didn't. So I still have those things. And so on the close, we had a huge, what I call a key reversal. We made a new low, close on the high. And so I just bought these S&P call options that expire on Friday. So I've only got 2 days for this bet to work off. And I bought the 401s. The S&P closed at 400 today. And that still tells me, I still think we got gas left in the tank on the upside here. So this is a big bet on the upside of the stock market. So I'm kind of hedged. I mean, if it comes off, my Apple puts will work. If it goes up, I'll make some money on these calls. Also last night in the post-market session, I think when we were on, Microsoft was trading at $252. It was up about $11 on the session. And I just decided to sell into that. I sold short at 251.80, and I covered about $20 lower this morning. I covered it, so I sold it at the high of the session yesterday and bought it at the low today. So that's just stupid luck. And, I just felt like there was a descending trend line in Microsoft at about 258. So it's all about risk and reward. In my mind, I said, okay, if I'm going to sell short at 252, I'm going to give this thing till 258. And, let's see if there's an offset. Also, gapped up $11. I kind of speculated it wouldn't hold. And I ended up making a lot of money on that trade. And in my FX account, I'm short this Canadian position. I've had it for a while. It's baked about square. It's going nowhere. But I think I'm going to keep building this position. Actually, as dollar Canadian goes higher, I'm going to probably, keep selling into that. And then I also went long some NASDAQ on the close, expecting that we'll have some follow through of today's action. So again, I used the price action to anticipate and make decisions. And then, I kind of use that as risk reward offsets. So with that said, before I kind of go into FX, I'll kind of share with you some of the market action today, certainly as it pertains to, hang on a second, this really having trouble here. So let me kind of go and share with you what happened. I'll put a couple of indexes up here. So I've been watching the levels of, a couple of indexes. I've been sharing it with you all week. We're at a will she, won't she type of, situation here. And let me just put another one here. So this is, these charts have been on the verge of either breaking down or breaking up. And it's been kind of this game for a while now. What is this market going to do? And today on the Microsoft news, the markets plummeted, but then they came back. And that's kind of the sign of a bullish market. When a market absorbs bad news and then comes back up, that is, pretty bullish price action. Now, this could be just a, huge fake out, and it could be leading us into a trap down the road. But for right now, you got to just say the momentum is, still higher, but it is tricky. Every day it changes. And to me, what I do is I watch these very key levels as to what and I try not to make or impose what I think is going to happen. I try and see what the market is telling me. So this is the S&P 500. And you can see that we're skirting with a little breakout above this trend line that has been in force and effect for the last year. And then we have, if we can join this, so we have this bunched up symmetrical triangle. And you can see now we're at the business end of this triangle. This thing is going to do one thing or another, and perhaps both. So I think that we could still go higher and then go lower. But, it's really been a game of Russian roulette in here. But the path of least resistance, at least for the last 4, 5, 6 weeks, has been higher. And now we're on the threshold of breaking above this zone. So you can see that every time we got to these levels, it sold off. But this time it got here and it's not selling off. It's going the other way. So, I kind of see what a market does at certain key inflection points. So you can see that every time this hit here, it then went on to make a new low. But then it hit here, and now it's kind of coming the other way. I don't know why my computer is buffering with this capture program, but you get the idea. So what I do is I look at an area. And so we had a key reversal here, made a new low, made a new high, close at the low in a downtrend. Now, if this was a bear market, it would then should be followed by that. But this is starting to bust this pattern. And it's, the market is absorbing a lot of bad news. And so the market is an anticipatory thing. Maybe the market's saying, hey, we're getting closer to the Fed, stopping to raise rates. The minute you start searching for the whys, then you start, get into that trap. You have to just look at these levels and be completely objective. So this particular ETF is called the IGV. And it's a weekly chart. Now, this is an ETF that comprises all of the technology and software stocks like Salesforce and Intuit and Microsoft. That's why Microsoft was so important to how this index was going to behave. And at some point today, with Microsoft selling off so bad, we were looking like this. This thing was looking like it was reversing. And, but the thing is, this is a weekly chart, and this bar will not close until Friday. So that's why, whatever your time frame, it's very important to wait for the close, because by the end of the day, we, sharply turned around. We were at, what, 263 or something on the IGV? What was the low? 265. And then we closed at 275, which was a meaningful reversal off the bottom today. So the close is very important. If you're trying to make decisions intraday and you see this thing looking like it's reversing lower and you go, wow, that thing's, you have to wait until the close. And that's why the discipline is so important. And I always say, you should do your transactions right on the early, part of right in the first 15 minutes of the session or in the last 15 minutes. Everything in between is like kind of a lottery game. You make some days, you lose others. But if you want to make money consistently, it's, sticking with the discipline. So you can see that, we're again fussing around with this breakout of this symmetrical triangle. And then, we also have this little bottom. Now, sometimes the markets will show that, they make a bottom and then you get this levitation. You think, okay, the market's bottomed, and only to make a new low. And that's really the characteristic of a bear market. And that's why, notwithstanding the fact that we may still rally, this is still really a rally in a bear market until kind of proven differently. But bear market starts turning around when you start making new lows and new highs. So we're starting to turn around. You can see the characteristics of this was lower highs. Now we're starting to take this out. And so the next threshold will be right here at about 280. So we're not too far. So that would then, indicate that we're starting to break out by making higher highs. So this is just a continuous game of chicken. You can see how bunched up it's been in here every day, every week. It's kind of the opposite of what it was, but it's incrementally starting to grab a foothold in here. Stocks like Qualcomm and Workday and other stocks are starting to look pretty good. The other index I'm looking at is the Russell 2000. So it's just good to look at, a number of different sectors, a number of different segments of the market. But all of these different things are starting to show that they're hanging out at the high end of their resistance level. And again, it's how we navigate through the next, I think by mid next week, we should have a pretty good idea. And I really want to see how it closes this week. And I suspect we still have more room on the upside. I just felt like, S&P was going to 4,100 and maybe even up here around 4,300. That's kind of been the target in my mind. And, every day it looks like it's not going to happen. And then somehow it puts itself back together again. And here we are. So it's all about risk and reward. Doesn't matter what the indexes are doing. It's about finding certain ideas where you can understand, and maybe understanding is an arrogant thing to say in trading. The minute you think you understand something, it'll always go the other way. But what I do is I look at a combination of the price patterns and the price action. And we've been looking at Workday and so this was the email that I sent over the weekend to our members, January 22nd, Sunday, and started talking about all of these setups. And one of the setups I was looking at on the weekly was Workday. So I recommended to our members, if you're interested in this program, I'll let you know how to sign up or speak to one of our people if you're interested. So this was Workday. I suggested buying it at 173.5 based on an inverted head and shoulders, cup and handle, and that kind of thing. And I put like a $200 profit level on it. And so despite all of the thrusts and parries today, Workday ended up, closing on the high of the day, as did Qualcomm. So these are the weekly charts of Qualcomm. And again, it doesn't matter what the asset is. I apply the same kind of analysis. First thing I do is I open up a chart. I go, well, what is this thing doing? Is it trending? Is it trending up, down, or sideways? And basically, this has been very sideways for the last year, but there have been moves up and moves down. And there's always a pattern that precedes a move. So, here was a descending wedge that got violated to the upside and broke out and had a nice move that way. And then consistent with the overall tone of the market, when I was saying, the end of 2021, that, we were going to go into a bear market, that's exactly what happened here. You had this rounding top, you had this double top, and everything begins with a pattern. So that if there's any shift in direction or continuation of direction, there's always a pattern that precedes it, that we can then use that pattern to say, okay, if we put a top here, prices are going to go lower. And basically, that's what they've done. And now the question is, where do they go from here? Here was another top that you could have made another place. So then we had this huge down move, and then we started to see what looks like an even atom bottom. An even atom is where you have multiple hits at the same support, and then you have kind of an atom. This really, it's not really a perfect atom, even atom. So anyhow, it looks like a double bottom. But the thing is, the market always gives us, different looks. And the question always is, when we see these things, are they sustainable? And if they are, where are they likely to go? And that is always the trick. And the way we determine if something looks like it's real is that it crosses through a certain threshold, meaning that, if we surmise that this was a double top, then we would have waited for a cross below what we call this neckline, basically a line that's, goes through the pattern. And then once it triggers that, it then likely confirms that that top we were looking at is real. And now we're looking at another pattern. And we're saying to ourselves, is this going to be the beginning of, a beautiful story here? And you can see that we broke out above here. And the real question is, will it continue? And, where will it hit, a problem area? So you can see that this has also been kind of in a nice looking channel here. So it's just amazing how these markets conform to certain technicals. They will stay within a certain band, and then you can see this start to jump out of here. And this is a very bullish breakout of this long-term downtrend. You have now the combination of this bottom and this breakout of this channel. Now, sometimes a market will retest an area of a breakout and then go again. So there's always that possibility. But Qualcomm is starting to break out. And so on all pullbacks, when the market pulls back like it did today, I look at those as buying opportunities. So Qualcomm dropped down to the 127.5 area and closed at 131. So, when what I try to do is, if the market opens badly, I look at all the stocks I want to buy. And that way, you'll get a bargain. Conversely, if the market opens higher, then I look at all the stocks I want to short, and then I can sell into that strength. And so I kind of have my list, stocks that I, look to short, stocks that I look to buy. And then on certain days, you look for those opportunities. On the bottom chart is the chart of workday. And you can see that this started to break out of this downtrend a few months ago, and has now just been kind of putting on this rounding bottom. So in the middle of it, we have this double bottom right here, looks very subtle. And then we have a rounding bottom. You broke out of here. And so I think that you're, likely to keep going higher. And I like to find areas on the chart where there are a lot of common intersects, where you look for a lot of areas where the market has kind of gone before. So you can see that this $200 area is an area that I believe this thing will go back to. Sometimes, old support becomes new resistance. And so this is likely to kind of seek this area again. But first we have to kind of get through the immediate resistance zone right here, which is about, I'd say about 190. So there is still some room and gas left in the tank, I believe, in workday for this thing to go 190. And then, I believe it'll go back to this 200. So this is how I look and approach every analysis I do, whether it be an FX chart, a gold chart, or what have you. So before I move on, so Tyrone, what I mean is that if I'm looking to short a stock, and for some reason the Dow opens 300 higher, then I will look to sell into that strength. So let's go back to the daily today. On both these stocks, you could have used the market action. See, the thing is to understand the pattern. Every day the market is going to throw you some kind of curve, and if you're trying to react to that daily action without understanding what the bigger picture is, you're going to be somewhat lost. So to me, and this was like Microsoft too, is that here you had on Qualcomm this bottoming pattern, and then it came back and did a rounding bottom right here. So you have a combination of two bottom patterns right in the same neighborhood here at this, call it 110 area, 105. The market started to base down here, and every time it went down there, couldn't go lower. You can see in this area is like pushing on a string for 2 weeks. It just kept on banging on that area, and then it couldn't go lower. So it's kind of like holding that beach ball underwater. You press, you let your hand off, and what happens? The energy just explodes. And so my the way I look at this thing now is that it is bottomed, so that you can see that it kind of busts through that trend line also on the daily and the weekly. So now every sell-off is a buying opportunity. You can see it opened lower here and closed higher. Opened lower this morning, closed higher. Now you have a key reversal in the direction of the trend. A key reversal means that it closed on the high part of the day. You can see it had a high, low, and close on the high of the day. So to me, this is kind of like a no-brainer. You come in tomorrow, you put a buy stop here, you put your stop loss underneath there, and that's how you set up a risk-reward trade. And that is a beautiful trade. You've now broken out And then you kind of retested this concept of retesting a breakout. You broke out, you came and you retested this neckline, and then you closed favorably. So this is, to me, a no-brainer. And it doesn't, if you win or lose, it doesn't matter. This is how to set up a trade where today's high was 131.5. So you could put your buy stop at 131.75, and the low was 127.70. So you could put your sell stop at 127.50. I don't know what the math is. It's $4 or $5. That's your risk. And, I think Qualcomm looks like it should go back to this 155 area. So you could make 5-to-1 risk reward. So Qualcomm, as does Workday, look like a phenomenal opportunity. Now, I'm going to put Workday up here because I started by, and again, I always get worried because it's a very nuanced discussion, but I look at chart patterns through a prism of what I expect them to do and then what they actually do. And I always struggle with the language to try and explain this. So, I'm trying to just reverse the order of this. When sorry, I want to just there. So to me, chart patterns repeat. They are repetitive, and we can learn by prior history. So to me, Workday looks like a preview of coming attractions. So this top chart is the company Ferrari. The ticker symbol is RACE. And right in here, and I talked about this on Monday, this looked like a perfect double top pattern. So if you see this, basically in my mind, I'm saying, well, I want to short this. Now, if you looked at the long-term trend, there were certain problems and what have you, but that's neither here nor there. And like I said, you look when something triggers this neckline, then in my mind is that, we should have a price action here, breakout, maybe it retests, and then we should see something like that. But when that didn't happen, we started forming this rounding bottom, and then we started to poke through here, right there. We closed right above there. I was saying to our members in the boiler room is a session that I do every morning, Monday through Thursday, 45 minutes ahead of the market, where we talk about what's likely to happen, what we're looking at. And right here, as I said, this thing is going to break out to the upside. Now, this is a combination of the long-term trends, as well as very simply right here that this didn't do what it should have done. This should have gone down, and instead it was going up, and it was repenetrating this neckline, just like silver did yesterday. Well, I thought silver was going to go down. It circled around, and by not doing something, it was going to trigger the opposite. So if something's not going to move down, it's going to do what? It's going to do that other thing. And that's exactly what it did. Now, I think Workday looks like the same thing, where you had this top, you break this neckline by a hair, and now you're right back up here. Now you've got all these price reversals here pointing in the direction it wants to go. And if that wasn't conclusive enough, today's price action should be, where now you have a key reversal in the direction of the trend. So this is what you look for. You don't have to be all confused and mystified by the market action. let the market go through its thing, and then show you when it's ready to go. The market will tell you when it's ready to go. And basically, you just join the trade here, put your risk there, and let it go. So now you understand two things: what your entry is and what your risk is. And that's all we can expect on the trade. That is the holy grail of trading. Where it's going to go now, in what time frame, how much, where, and when, that part we don't know. But this thing looks like it is going higher. So all we want to do is figure out where to join the trade and where our risk is, and then let it go. Are there any questions on this before I move to FX? So Sean says, could this be considered transition between a bear and bullish market? It feels like that, Sean, it really does. It feels like we've been in a 13-month, downtrend, and things change, right? So, but before they change, they put on a pattern. So race kind of had this kind of inverted head and shoulders. So, it went down, put on a pattern. I don't know why my drawing tools are messed up like this. This came down and also put on an inverted head and shoulders. And then it gave you this fake look right here, and then suckered people in right there. So this is, what the market does. It will show you a look, and you'll say, well, this is what Mark talked about. This is what I see in the textbook. You'll load it up here, and I used to. This is, I learned by losing a lot of money and saying, okay, this is a double top, and even when it goes here, I'm going to get option, I'm going to sell more, and I would just keep selling into this thing until I got wiped out. So after a few of those times, you kind of live and learn. So the market lays all kinds of traps. The market puts on all kinds of patterns. And, I think the S&P is doing that, where, you kind of get this descending triangle, and it lures you in, by hitting the bottom, hitting the bottom, hitting the bottom, and then it comes down, and then it doesn't, and it creeps out this side and goes that way. And you go, wait a minute, I thought this was, but that's one way to go. The other way is that this does keep working in here, and if it hits enough time, then it is going to go that way. So it's just understanding, and I've got a lot of experience doing this thing. It's just understanding how these things are likely to play out. But again, it all comes down to just risk and reward. And that these right now today revealed, certain plays that you can make tomorrow, where the market has set up in a certain way, and you can create certain risk and reward. And the way to make money is that you make way more than you risk. So, if you're risking $5 on this, I look to make, 3 times my risk reward. So if you can make 15 and create a 3-to-1 risk reward ratio, that's how you make money. Trading in and out every day, you're not going to make money. Frank says, our mind is locked into a bear market for 2023. How do we change that? Well, my mind is too, Frank. I'm always trading with that heart attack. Being long has been so hard because I'm always waiting for that secular, bear market to kick in, like it did the other day. And that's why you kind of just have to, wait for certain days where there's a little bit more clarity. It's been, obviously chaotic in here. But today, I think the clouds are starting to part. Now, there's still a trap here. You can come here, and it's every day is you second guess yourself. And I believe me, I do too. But you just got to look at the price, and price is just telling us that it's going higher. And then you get a day like today, like in the S&P, and I just bought this on the close. So when I see I'll wait the day, and then I'll see how it closes. And, this thing had a key reversal in the direction of the trend. You can see that there's a channel here. And, we could still, this thing is still, there's still resistance up here at 4,100. But this just feels like it wants to go higher. I don't know why. And again, this looks like race and workday, where patterns are being disrespected. So this is a perfect top. And what happened is, just like race, you went down, and now you're back above this neckline again. So, and now you got this key reversal above 400. So I just bought the calls, and I bought the the indexes on the spot market, and I'll probably buy a lot more other things. I also bought workday on the close. So, and if you're wrong, then you understand where your risk is. My risk is today's low, and let's see what it does now. But but that's the problem. If you're listening to the pundits and the experts and the Federal Reserve, and there's so much fear baked into this thing, and then that's when the market gets caught off sides. Coming into December, I mean, just about every single analyst I watched on these programs, every single one said the first half of the year is going to be terrible, and the second half we're going to have a rally. And the thing is, if everyone feels the same, that's a good chance people are going to get caught off sides, and we've done nothing but rally, the first 3 weeks of the month. And the market is absorbing. I'm taking up a lot of time here. I said I would cover FX, so let me just show what happened to Microsoft today. The market is just absorbing bad news, and that's the hallmark of a bull market. Is that we'll shrug off. So this looked like Qualcomm. And I could tell, and I said this the other day, this is where the problem was. You had a reversal here, and to me, getting above that was going to be a problem. But now you've kind of set the table. So I always look for what I call this elastic band effect, where you pull back the energy in order to go again. So now you look like Qualcomm here. You've got this is what we call an Adam and Eve bottom, where you got two bottoms in one place and then a single bottom in the other. And it's, kind of a classic, even Adam bottom here, but it still kind of has to go through this neckline at around 250. So, it's still got, but this, again, when we see these reversals, these things kind of point in the direction they want to go. Now, you can't just trade reversals in a vacuum, but we're also seeing this preceding pattern. So the pattern, together with the price action, starts telling us, hey, we can start taking a poke at this. But guess what? Now we know exactly where the risk is. Sometimes you're threshing around in here, you don't know, until you see one of these, but now the market has revealed exactly where the risk is. If you get long here, that's your risk, and then that's your reward. And that's the best we can do. But the market, if you be patient, the market will reveal its intentions through a combination of patterns and price action. Here was a head and shoulders. And from that, you had a nice move there. Now you started, seeing these this whole thing feels like this thing is trying to bottom. I can't really envisage in my mind. So, put it the other way, play devil's advocate. And this is what I do all the time. This is what I do. I have this visualization process where I draw all this stuff and I go, okay, how would this feel if I was short here? How would this feel to try and cut through all of this? I don't know. It still could. I mean, it's still dodgy in this area. It hasn't taken Qualcomm's already taken out all of this stuff. So, actually, I shouldn't say that. It's not convincing yet. It's really not. I mean, tomorrow we could look like this, and I could very easily see it, going like that. So it's kind of a day-to-day affair. And some charts are better than others. Qualcomm is better than Microsoft. Workday to me is better than Microsoft. But I'm starting to see the beginnings of something. Now, if Microsoft starts taking out this area, so this is where the market was trading last night. That's why, I mean, I took it, you're gambling if you're trading in the earnings hours, but I shorted right here, 252 in the aftermarket session. It didn't even show up on today's session. It just opened and went lower. I made $20 on that trade. But in my mind, this was the barrier. So, this was an area where, I thought, okay, it's not going to easily cut through that like a knife through butter. And so if we start reapproaching these areas and start breaking out, this will tell you that Microsoft is starting to bottom, but it still needs to do some work in here. I would much rather trade Qualcomm. So each chart is different. I mean, all of these things are highly correlated. When the market goes up, all of these, stocks will kind of go up together, some better than others. But, I can see the risk reward in Qualcomm or Workday a little bit better. I just think they're better charts. So let me move on to FX. So we've had probably the longest uptrend on record in the US dollar. Now, bull markets don't die of old age. So again, we can't just attribute certain metrics. So I'll start with, multiple layers. What I like to do is, look at the longest term, see what's kind of going on, and then peel it back, dial it back to the weekly and then the daily. I'm always looking for the magnitude of big moves where you can take out a nice chunk. So what we see in the dollars, we've had an 11-year uptrend, and you broke out above this area. I don't even know which is, let's just take the more conservative area. We broke out here. We were in this trading channel for many years. Then we broke out, made new highs, and now we're right back almost in the geography of this trading zone. And so this to me, once it kind of re-enters this zone, all these guys up here are trapped. So this is what's called a bull trap, where the bulls see a breakout, they see a breakout here, buy it, get long, and now they're trapped up there. And if the market sets a trap, it can go in the other way very, very quickly. But now we're starting to retest this area. So this is kind of a zone where, I would expect some support to come in before this thing does decline. I do think that the dollar move is over. And the thing about the currency moves, they move very smoothly for years. When they get going in trends, they get going for 3, 5, 7-year trends. In this case, this has been like an 11-year trend, 2012 to 2023. We've been in an 11-year uptrend. I think it's the longest uptrend on record. But when the currencies do go, they tend to trend. And I think that we are setting up for a reversal and probably a collapse. The minute the Fed stops raising rates, this thing will collapse. And I think that's what's happening. But now we're trading around this tricky area. So even though I'm very bearish on the dollar, you have to be aware of where the levels are and where support is likely to come in. So maybe, being, short dollar Canadian right here is not so good. But I do expect any bounces to be selling opportunities. This thing has topped, but the ranges are likely to be pretty robust. So that was the monthly chart, and this is the weekly chart. So, we get different perspectives. The longer you look at, the more history you have, the more you can understand something. So I'm looking at this through the prism of two very bearish price patterns. One is called this ascending broadening price pattern, where prices go higher throughout the pattern. They start out narrow and they widen or broaden out at the top. Now, gold did this and then broke out of this thing and then went back up. So again, just because I said something, my mindset is I draw these structures and then I observe how does the market trade within these structures. So that was pattern number one. Pattern number two is this head and shoulders. Looks just like a man and woman's left shoulder. The peak is the head, and that's the right shoulder. And then we, cut through this neckline. And you can see, and I should have put this one on top of the other, and I'll do that. This is what the IGV looked like. The IGV, that ETF that I look at, the software thing, when IGV was at 370, I said it's going to 320 because it had a combination of both these patterns. So I'm seeing whatever I saw in IGV last year in the dollar. And now you can see that the dollar has now broken under this neckline and under the support level of this ascending broadening, and it is going to begin its descent. Now, it's possible that, when things break out, they can re-challenge, although it kind of looks like it's done that. We could kind of come back up here and re-challenge this thing and then go lower. So we are at this kind of critical area, but this thing looks like it just wants to fall out of bed. I mean, it's, this thing looks like good to go on the downside. So my mindset now is anything, anytime the euro sells off, I'm going to buy into it. The Australian dollar sells off, I'm going to buy into it. Dollar Canadian, I'm going to buy into it. So that's how I'm looking at the currency. I'll put this on top, and then I'll open this up for questions, and I'll finish it off. So I referenced this, and this again, it's like race over workday and the dollar index over the IGV. It's so this is going to be like previews of coming attractions. Let me just. So on top, we have the dollar index, and on the bottom, we have the IGV. Now, we don't have the entire history here, but the IGV was in this ascending broadening pattern. And then it also had this head and shoulders. And I, was saying that right here, when it broke here, I was saying to our members at 370, this thing's coming down to 340, 260. That's exactly, we can't see the whole history here, but that's where the beginning of the pattern started. So if we look at the dollar index through the same prism, this is previews of coming attractions. So what you saw here is likely to be what you see here. But now, don't go home and, dollar goes straight up and say, well, Mark told me it was going down. What I will look for is, what is it doing here? Does it start going down and then start doing that and start breaking this pattern? So once it starts breaking or departing what I'm looking at, then it's going to do that other thing. So right now I have a certain mindset, but if the market all of a sudden does something, different, then you have to adapt. And that's the whole thing of what I do. I look at patterns and then try and figure out how is the market going to react once these patterns have been established. It says it's interesting that you don't see that the dollar has stopped going lower. If nothing, a short covering rally is now a possibility. It kind of is, it's at a very key level. You gotta, you have to respect these levels. Let me get rid of that. So, I mean, this still looks locked and loaded to go lower. This is now broken down out of a head and shoulders, and it looks pretty prime. You have this inside weak bar, but, you have, this area of support right here. We can't quite see it. It comes in, I'd say, just a hair lower. So right around here, maybe we get a little bit more, but, yes, this is an area where, you could, on the other hand, when these traps are ignited, you could just see a collapse. So you just have to look at what's going on in the price action and create a risk reward. So I look at this inside day bar, or now in this case, an inside week bar. I say this is a coil, and the coil should release that way, but sometimes it will release, and then you just got to watch and see how does that, how does it get here? So if it goes lower, and then by the end of the week, it looks like something like that, then you don't want to fight that. So I'm always looking at price. Price is always telling me, if I'm on the right side, then I go with it. And then if price reacts and, gives me, something like this, then, you should know to, get out and get on the other side. Peter says, can you comment on the yen? So the yen made a pretty good call on this breakout. I think I showed you earlier, but I'm not going to go back to that. So this is the dollar yen, and it looks kind of a lot like the dollar index. So there was a breakout of a long-term descending wedge, a 4-year thing where I was mainly making money on the downside. And I expected the yen to go lower, the dollar versus the yen, because we were in this kind of descending pattern, and then all of a sudden it popped out here. And I told our members it's going to go to 150 right there. And it went to exactly 150. And now I think this yen move is over. And, it looks a lot like the dollar index. So you can see we're kind of just on this breakout here. And, you could have all kinds of thrusts and parries through here. It could take a while. I mean, you've had, a pretty good move from 150 to 130. You've had, 2,000 pip move. And so you're in an area now, and you can see it right here, where, it's likely to be kind of back and forth. This is going to be a little bit of a support down here in the 125. So, probably likely to go into a lengthy trading range here. You could probably, sell it at, 133 and buy it around 125. And it's probably but I think the long-term trend is lower, consistent with the whole dollar complex. Now, the pound yen and euro yen, it's been with the central bank and what have you, it's kind of hard to figure out, what's going on here. I don't know why the history is so short. Sorry, I'm having a lot of computer problems here. I'll have to, I should have rebooted before this. So it's just always important to look at the history see where the major levels come in, and euro yen still actually looks constructive. So if you look at, what do we have, 15 years of history here, euro yen broke out of the symmetrical triangle. And, I would anticipate that it's still going to keep going higher. Just hit a major level up here, the 150. But, I think that this feels like it still wants to go higher and what I look at is you can see these key reversals, made a new low, close on the high, made a new low, close. And these are monthly. So it's I don't know, different time frames, look like different things. We're kind of also treading water at the lower end of this channel. So we're in this channel, and now let's see how we close for the month, and then if it follows through. So we're just dialed into this very this very rough resistance level, and yet we still have higher lows and higher highs, and we're in this channel. If it started to depart and leave this channel, I would look for that kind of clue as to whether it's going to come back down. So, depending on your time frame, it's very dicey here, because, you say, if you go long here, you got to get through all of this stuff. And conversely, if you go short, so if you're not sure about something, don't do it. And I'm not sure about this. I could make the case either way. The path of least resistance right now is higher. You have to put a gun to my head, I'd say this is going to go higher. But, in a minute, this thing could start breaking this thing and start looking like a, double top and a head and shoulders in here. So I could make the case for both. And if you're not sure, just, let the market be the referee, because in a way, I'm kind of seeing this as a double top and maybe a shoulder. And then if that's the case, you're going to need to create some kind of symmetry here and wait for this shoulder to build. But this is, again, where you see these traps. This looks like a double top, and it kind of is. But you're in this pattern of higher lows. A double top, should come down, and you should kind of have this look like this. And so that is the trap. The market can look like something, and you could make the case that looks like a top, but then you've got this case of higher lows. So, it feels like it's going to do something like that. But it's going to be messy for a while. It's just locked up between the low and the high, and, it's going to take a good while to resolve this. So let it resolve itself and give you a good trade. Pound yen, probably the same kind of deal. Pound yen's been kind of in a long-term downtrend. And here is, we bumped the top end of the triangle. So again, just no coincidence when you hit this, you have these reactions. That's what Microsoft did last night. It hit that area, and that's why I shorted it up there. So I'm just trying to show you how, I kind of observe structure and then try and make pricing decisions within that structure. So you're trying to figure out, okay, this is in a primary downtrend. It's been going up. And so to me, this looks like the governing pattern here. You have a double bottom. You have this head and shoulders. It broke out, and then it retested. You can see it had this massive breakout, retested, and now, you want to go back up. So I would, I got to think that this is going to try and figure a way to go back up. And if it starts getting back up here, you could have a huge move. And it kind of feels that's what it's looking to do. But, it's pretty dodgy in here. The ranges are huge, 155 to 170, everywhere and nowhere. So these things are kind of tough to play. But again, you just look for your clues. The market leaves clues. Market made a new low, close on the high, and I would be inclined to buy it here and see if the momentum, although, again, when it's jammed up like this, it's not going to go straight up. So bottom line is euro yen and pound yen probably going to be very wild in a range, vacillate around a lot, and we'll have to see, if they just kind of stop here and go back in the trend, or they break out. But I suspect it's going to take a good long time to kind of fill this in. So let me kind of end it here. I'm going to, if you guys are interested in my way of trading and joining a community of like-minded traders, shoot me an email. And we do all kinds of things. We do things in the morning in the pre-market. I do a Friday, what I call an underground session, where I go through all of the markets, and then we open up for questions. You ask, all the questions you want. I go through all of the trades. The last 3 days, I was just trying to give you an insight into a way of looking, a way of creating risk and reward when it just seems like everything is, frenetic and out of control. There is a way to dial back all of that craziness and, make a lot of money out of it. So, if you want to try and figure it out on your own and read the notes from the Federal Reserve and the pundits there, then, everybody has their own way. But we have a growing, very robust community now that we're going to really emphasize building a community and, growing a lot of like-minded traders. So if you're interested in joining, we'd love to see you. And before I end, I'm going to ask you a favor. I put in some time. So I'm going to ask if you would just let me know your thoughts on great timing. This is our review website. So if you're interested in some of our services, then you can check out what other people have to say before you check it out. And then I would really like you to go, it says write a review right here. Just click this link and let me know, your experience. Let me know how, if this made sense to you. Before I go, did this process make sense to you guys, or does it just sound like a lot of Chinese? Because I never know if I, communicate my ideas. Dorota, you're welcome. Frank, you're welcome. Fidel, you're welcome. And Eduardo, thanks a lot. So Simon says this was crystal clear. Any other comments from people who've not been exposed to? Is there anybody who has just started trading or just started to learn price action? I'd be really interested to get some feedback if Ahmad says this made sense. So I'd really be just interested to know, anybody that's not a member of the Pattern Trader, anybody that, trades on their own or trades with somebody else, if, this had some impact, or do you see this as a way that could enhance your trading? So Phil says, I'm new to price action. So Phil, actually, you're lucky because, if you've been trading a long time, you have a lot of, set ideas. So, I don't claim to have, all the great ideas. There's many ways to peel an onion, but, I've created a construct with which to look at the market that over time, I've been able to make a pretty good amount of money. So, with that said, please, leave a review. And if you're interested, just send us an email. Hey, Stephen, whatever works, there is no one way of, doing anything. And especially in this market environment, last 4 or 5 months, has been extremely short term. Martin, thanks a lot. Stephen says, session was great, gives us structure to work with rather than random. Thanks for your time. So Stephen, really appreciate your thoughts, and please leave me a review. I don't know if did I put it in here? I'm having all kinds of buffering problems with my computer, so excuse that. All right, guys. Dwight, thanks a lot. I'll see you all very soon, hopefully. Take care.
All right, Mark. See you later.
Thanks, Eduardo.